it's exciting to see another crypto asset be applied for on an ETF format. It shows that there is a desire for more crypto assets to become institutionalized via the ETFs. I think it's a little premature to say that even a Trump win would mean an approval for a SOL ETF. Solana is very different than Bitcoin and Ethereum in many regards.
It's Wednesday, July 3rd, and this is Markets Daily, a show where we get into the minds of some of the most experienced and smartest investors, CEOs, analysts, strategists, researchers, anyone with a hot or smart take on the crypto markets. Before we get into today's discussion, though, let's take a look at what's going on in the news this morning. Bitcoin and major cryptocurrencies experienced a sharp decline during Asian trading hours, reversing gains made earlier this week. The price drop was attributed partly to concerns of large Bitcoin sales from the defunct Mt. Gox exchange, which is set to distribute assets later this month. Now, U.S. listed ETFs tracking Bitcoin also recorded outflows of $13 million, breaking a 5-day streak of inflows. This while Architect Partners says that the industry is beginning a major growth phase. Some positive news this morning. The advisory firm said that the industry added more than $750 billion in value in the first half of the year. Now, joining us now to unpack what's going on in the crypto markets and help us make sense of all of this is Bitwise Senior Investment Strategist, Juan Leon. Juan, welcome to the show.
Hey, Jen. Great to be with you.
Great to be with you, too. Now, the markets are looking a little more depressing than they were looking probably a week ago. Talk to me about what you're looking at this morning. And if you were to allocate a portfolio, where would you be starting?
If I was looking at a portfolio with these markets being down over the past day and month, I think it's a great time to allocate in crypto. I'm excited about what I'm seeing in traction in both Bitcoin and Ethereum and companies like Coinbase as well. So I would allocate to those three assets for sure.
So Bitcoin, Ethereum, and Coinbase.
Yes.
Talk to me a little bit about that, about Coinbase. You know, we have a lot of stocks that are, I guess, crypto-related stocks, crypto-adjacent stocks. Why Coinbase?
Well, Coinbase is primed for growth in many of its areas. We're in a bull market, even with this volatility of prices. We're in a crypto bull market that is great traditionally for its trading volumes. So we think trading volumes will continue to go higher over the next year for Coinbase. And that has been historically a big driver of its revenues, but it's also been diversifying its revenues over the past couple of years, and now has great growth coming from its subscription and services areas. And that in that area, we are very excited by the prospects of Base, for example, its layer 2 solution that is now the fastest growing layer 2 on Ethereum. And we're seeing significant traction there. And we're seeing things like partnerships. Recently, last week, Coinbase announced a partnership with Stripe. Stripe has 20% of the global payment processing market share. And with the partnership now, USDC settled on Base will be available to customers from Stripe. So you'll be able to spend USDC on your credit card, on Apple Pay. That is settled on Base, which brings fees to Coinbase. And so that's bullish for Coinbase. Ultimately, it settles on Ethereum. Base is built on Ethereum as a layer 2. So it's bullish for Ethereum as well. So I think things like that are great avenues for growth for Coinbase. And we're seeing its international expansion as well. And that is showing great traction. So we're very excited about what's going on with Coinbase.
Now, on the topic of stocks that allow investors to make a bet on crypto markets, I got to ask you about Bitcoin miners. I know that Bitwise recently said that crypto and AI could have a very bright future ahead. I think they said that it could be a $20 trillion industry in the future. We can get to that a little bit later. But given the fact that Bitcoin miners are now diversifying their business models, looking at how to incorporate AI into their business, are you watching any Bitcoin mining stocks?
Absolutely. I'm watching all of them. And these developments are very exciting. I mean, a year, 2 years ago, no one would have thought that Bitcoin miners would now be sitting on the opportunity to be square and center in the infrastructure build out for the AI boom. But they are. They found themselves in that position. And we've seen this year recently the $3.5 billion deal between Core Scientific and CoreWeave. We've seen more recently the $150 million investment from Code2 Management in Hut 8 to continue to build out their expansion. And just this week, we saw the announcement from Northern Data, who said they're prepping an IPO for both their AI and Bitcoin mining data center units. So they're right in the middle of the opportunity, and that's creating excitement from investors and bringing in capital for further growth.
Let's talk about that a little bit more. I do have the number in front of me now. So what was said by Bitwise is that AI and crypto combined could add a total of $20 trillion to the global economy by 2030. What goes into a prediction like this?
Yeah, well, there's been studies made. PwC made some studies about the potential for crypto and AI to contribute to the global economy looking out to 2030. They estimated the two industries combined could add an additional $17 billion to the global economy. We looked at that, and given the synergies that we see emerging between crypto and AI, we mentioned the Bitcoin miners, but there's more opportunities as well. We think it could have a compounding effect, and so that 17 trillion could be higher, much closer to a 20 trillion, or even above that. So we're very excited about the opportunity, the long-term opportunity for these two high-growth technologies to work together to enhance the economic growth prospects of the world economy, productivity for individuals and businesses, and new applications for consumers.
And when we talk about crypto and AI, are we talking about the two industries kind of growing together, or are we talking about the two industries coming together and there being some sort of convergence that gets us to this number?
Both. Each industry has its idiosyncratic growth factors, and so there's wide adoption for these technologies individually, but we see many opportunities for them to intersect and collaborate together, and for synergies to happen between the two. And so we think it's a mix of both that is going to be driving them.
Now, I got to ask you your opinion on the AI tokens. I believe that on the show yesterday, we spoke about in Q2, there was a little bit of a surge in AI tokens along with some other tokens that kind of went against what the rest of the crypto market was doing. Are you watching any of the AI tokens as a bet on AI?
Yeah, I'm excited by the decentralized AI tokens and the prospect there. There's decentralized companies like OpenAI, Meta, Google that are building out their AI capabilities, and they have lots of resources. But there's fears there with and concerns with the centralization of who's building out AI, who controls that, and the biases that go into that. And so there's a big push for decentralized AI, and that's where the opportunity comes for some of these projects. Projects I'm excited about. We're seeing the merger happen between SingularityNet and Fetch AI and Ocean Protocol. That is going to allow them to pool the resources of the three nets and be able to enhance what they're doing. And so I think projects like that and combinations like that are very important for the space to be able to evolve from a decentralized point of view and bring that transparency that blockchain technology does and the pooling of resources to the AI movement.
Tell me a little bit more about that. I know the convergence of those three projects was big news this week, or big news in the last few days. Why is that so important?
It is really important because it allows the expertise of those projects to come together. Each of those projects is tackling slightly different areas of AI. Fetch AI is tackling more of a marketplace for consumer services. SingularityNet is tackling more of the backbone building of LLMs in a decentralized manner and creating a marketplace for compute. And so these projects coming together really solidifies the offering and allows them to verticalize their AI capabilities to integrate and be more effective in the marketplace together.
Juan, let's talk about Bitcoin now. I mentioned at the top of the show, Bitcoin sunk more than 4% in the last 24 hours. What are you watching when it comes to the largest crypto by market cap?
Yes. Well, we saw Bitcoin, as you mentioned, down 3% over the past day. It's 12%, down 12% over the past month. But it's important to keep in mind that it's up 36% year to date and up 93% over the past year. So I think it's important to zoom out a bit and contextualize the market moves that have happened. Looking at this year, we saw the run up to the all-time highs near 74,000 in mid-March on the back of the debut of the Bitcoin ETFs. Now, the ETFs have been the best performing category of all ETFs of all time and have seen 14.5 billion in inflows since the launch. That surpassed everyone's expectations. But of those 14.5 billion, 12 billion of that came in through, it was gathered through March. So what we've seen is that since the all-time high, the last 3 months, the ETFs have gathered an additional 2.5 billion, which is great, but the flows have slowed down, which is natural to expect that as the first wave of investors deploying capital into the ETFs runs its course. And so then we've had additional selling pressure from Bitcoin miners post-halving to cover higher costs, more recently from government entities selling out some of their seized Bitcoin. And so that's putting pressure on the market. And what we've seen now is since mid-March, Bitcoin has been wedged in a consolidation channel between 60 and 70,000. And investors seem to be in a holding pattern until the next catalyst emerges.
What is the next catalyst?
I think that could be a couple of things. It could be the second wave of inflows into Bitcoin ETFs, which we at Bitwise expect to come from platform approvals of wirehouses, the likes of Morgan Stanley, in the second half of the year. We think that'll be a big wave of capital that will reignite the momentum in Bitcoin ETF inflows. We're also in an election year, as we all know, and we've seen a pro-crypto bipartisan coalition begin to form in Congress. That has been encouraging, but of course, investors are waiting for the outcome of the election, given the current SEC and the current administration's unfavorable stance toward crypto, so they can better gauge the potential for political and regulatory progress over the next 4 years.
Well, I got to ask you about the elections, right? Trump has come out as this, I think he's called himself the pro-crypto candidate. There have been industry leaders who have come out in support of Trump by donating to the campaign or just voicing their political opinions online. And now some are saying that if Biden is not the Democratic nominee after poor performance at the last debate, the crypto markets might react negatively. Do you have a thought or opinion there?
Yeah, let's wait to see what happens. Trump has certainly categorized himself as very pro crypto leaning. In contrast to the Biden administration, I think that's helped him garner support and votes from the crypto voting bloc. So that's boding well for Trump. He's played that very aptly. We'll see what happens with Biden. If he remains a candidate, well, he's already feeling pressure from Democratic senators and congressmen who are realizing from their constituents that crypto is an important technology, and they've started to switch their views. We saw that in the bipartisan coalition that helped pass FIT 21, that repealed the SAB 121 measure in Congress. And so there's an emerging voting bloc of both sides of the aisle in Congress. That is putting pressure on the current administration to change their stance. And it's favored well for Trump to take the lead in really advocating for the industry. Now, if there's a change in the candidate from Biden, we'll have to see who comes in and what their stance on crypto is. So that is at an unknown at this point.
I have to ask you on the topic of the upcoming elections. Van Eck and 21 Shares recently filed for a spot SOL ETF, and some analysts are saying this is maybe a bet on Trump or Republican win at the election, since these would come up for approval in the new year. What do you think? What do you think's driving these SOL ETF applications?
I think it's exciting to see another crypto asset be applied for on an ETF format. It shows that there is a desire for more crypto assets to become institutionalized via the ETFs. I think it's a little premature to say that even a Trump win would mean an approval for a SOL ETF. Solana is very different than Bitcoin and Ethereum in many regards. And some of the measures that the SEC has used to approve the Bitcoin and Ethereum ETFs, it's unclear that Solana would pass those measures. For example, Solana is much more centralized than Bitcoin or Ethereum are. Also, to approve the ETFs, the SEC has relied on regulated CME futures in order to be able to keep track of the underlying price movements in order to monitor the market. And Solana doesn't have regulated CME futures, at least not yet. So those are things that stand in the way of potentially an approval. But I think it's exciting nonetheless, and we do hope that an ETF for Solana happens in the future.
And Juan, we can't talk about ETFs without talking about the ETH ETF, which could be trading any day now. It's July 3rd today, so it really could be any day. What do you think is going to happen to the price of Ether once these products start trading?
It's a great question. And we've seen ETH also down 12% over the past month, but it's actually up 40% year to date. So it's slightly ahead of Bitcoin on a year to date basis, which many people don't realize. So it's up more than Bitcoin year to date, and the ETF hasn't even launched. So we at Bitwise think we put out a piece recently where we think that there could be 15 billion in inflows into the ETH ETFs when they launch over the coming 18 months or the coming 18 months after launch, based on allocations between Bitcoin and ETH in markets like Europe and Canada that already have spot products for both, and also based on our expectations for flows into Bitcoin and ETH ETFs in the US going forward, given their relative market caps. And to prepare investors for the ETH ETF opportunity, we're educating them on how to differentiate between Bitcoin and Ethereum. Many investors new to the asset class lump them together, which is understandable since they're the two largest crypto assets, but of course, they're very different. So we're helping investors understand that Bitcoin is structured as a new monetary asset that aims to compete with gold as a store of value, while Ethereum is structured as a technology platform, as a fully programmable blockchain that serves as the backbone for new crypto-based applications like tokenization, stablecoins, and decentralized finance. And so investors love tech, we know that, and that framing is getting investors really excited about ETH, given the innovation happening on its platform. Just to touch on that, we saw the Denkin upgrade on Ethereum earlier this year. That has brought down transaction fees on L2s by an order of magnitude, and that's helping the applications built on L2s gain traction, such as Base, which I mentioned earlier.
Juan, thanks so much for joining the show.
Thank you very much, Jen.